I am here joined by Mr. Adhish Patil, who is the CFO and COO of the company. Welcome, Adhish. Pleasure to have you. Well, good set of numbers that the company has seen. Just wanted to ask you, you said that the good numbers that you're seeing is on the back of volume growth. Now, what was the volume growth, and has the pricing pressure stabilized? Because that's one of the concern in overall chemical industries as of now. And sticking to that, what was the volume growth?
Okay, thank you. So the volume growth for this quarter was almost up by 9% if we compare year on year. The exports did pretty well. It was very high double digit, and even the domestic volume growth was around 5%. But then we had around 4 to 5% of negative price variation with respect to June 24 quarter, and that is the reason why the overall growth came to around 6%. If you talk about pricing scenario, the prices after December 24 quarter stabilized quite a bit. So I would say around last 7 to 8 months, the pricing is quite stable when it comes to input as well as the selling prices of APIs.
And also, Adesh, so there was pricing pressure which was, coming from China. Have you seen the pricing pressure? I got that point that you've seen that the pricing has been stabilized, but was there pricing pressure from China, and because of that, have you lost any kind of orders or?
Okay, so definitely in last 6 months we have seen that China has been acting little erratic in some of the products, not all, not across the product basket, but in some of the products probably because of extra stocking or something like that. But in overall, means in longer run, we are not that afraid of it. But in shorter run, definitely, as you correctly pointed out, that there might be some scenarios that where we might have lost few orders because we did not want to crash the price too soon, and we wanted to check the markets. But in API business, it is more recurring. So typically, even if you lose orders, it is more from 3 to 4 months perspective. And again, there is a repeat order from the same customer.
Okay, so now because you might have, lost some orders, uh, will you stick to that guidance that you have given when it comes to EBITDA margin and, revenue? Because you, in the last con call, I remember you said you are expecting a double-digit growth for the next 2 years with an immediate target to cross, 3,000 or 3,500 odd crore of revenue. Uh, which was actually revised from 4,000 crore target due to price correction, if I'm not wrong. So now, considering the scenario that you are in, what will be the immediate target? Will it be 3,000, 3,500? Will you be sticking to that?
Yeah, we'll be pretty much sticking to that because since we gave that number, the pricing hasn't come off that much. In fact, it might be the other way around, but let us assume that for now, I think we are still sticking to that 3,000 to 3,500 crores of turnover in next 3 years. That would be our target.
In next 3 years?
Yeah, next 3 years because this year, FY26 and FY27, uh, uh, because we have launched two greenfield facilities, typically it takes 3 years, to get the optimum utilization of that facility, means anywhere between 80 to 90%, because there will be a lot of customer approvals which will be involved. So, and plus in that target, we have also estimated a formulation revenue of around 500 to 600 crores, and that is also dependent upon a lot of export registrations of the dossiers what we are doing right now in regular OSD as well as the oncology therapy. So that takes time. So that is why we said that 3,500 is somewhere in by FY28 is what we estimate.
Okay, so FY28 3,500. But Adesh, can you give us a ballpark number that you're expecting, or even in a percentage term, what kind of growth you're expecting when it comes to FY26 and 27? Because FY28 we have a rough kind of idea, but what about 26 and 27?
So when we started the year, we had internal targets of achieving minimum of 15% CAGR volume growth for this 2 years, that is FY26 and FY27. So we started year little slow with the volume growth of around 9%, but we definitely expect the second half to be much better of FY26 because our greenfield facilities will be very much operational and active, and FY27 will be even better than FY26. So we are sticking to that growth target of around 15% CAGR for 2 years combined.
Okay, 15% CAGR when it comes to top line. Now, Adesh, also you had given guidance when it comes to margin as well. So, will you stick to that 14 to 15% of EBITDA margin guidance that you have given?
Yeah. So if you see current quarter, in fact, our gross contribution has improved, and you correctly pointed out before the interview that because of the product mix, also it is because of that as well. So as far as gross contribution is concerned, we are pretty much there. In fact, the greenfield project which is coming up is backward integration, so that will also help to improve the gross margins. Plus, we are putting more efforts on the regulated sales of US and EU. Because we also already got the approvals from the regulatory bodies. So that will help us bring our margins up. So EBITDA margin of 14 to 15% is pretty much achievable. Definitely for maybe the first 2 quarters of this current financial year might be a little slow, but Q3 and Q4 we definitely feel that 14 and a half, 15% margins should be possible.
Okay, so first 2 quarters may be lenient when it comes to margin, but margin will pick up from H2. Now, Adesh, also on the specialty chemicals, I think you have done some greenfield expansion and all, and with that you had anticipated sales potential to reach around 200 to 250 crores in the next 2 years. Now, where are you now in terms of specialty chemicals? How much business you will do when it comes to FY26, and will that go to 250 crore in next 2 years?
Yeah, so next 2 years it is pretty much we are pretty much confident that it should go to that extent. They came and intermediates put together. So our Saika greenfield facility, which is put for specialty chemicals and intermediates for our anti-diabetic drug. So we already started trials on that plant. And once the trials are successful, we will be doing put to use in this quarter or maximum by next quarter, but most probably in this quarter itself. Now that is a very high pressure and high temperature reaction. So getting leakages in piping and equipment is pretty normal in this particular scenario when you commence the plant. So we are hopeful that this trial will go through, and once it go through, then it will immediately start adding to our bottom line by the way of backward integration. And as far as our Tarapur greenfield facility is concerned, where we are manufacturing salicylic acid, though we have put that plant to use since last 5 quarters, but the scale up of the production was pretty challenging and it was an in-house developed technology, but we are pretty much there. So we are in the process of installing few equipments, and in this month itself we'll be trying to scale up a little bit. And so both these greenfield put together will definitely give us a revenue potential of almost around 500 crores all put together across the company when it comes to spec chem and intermediate segment.
Right. Well, got that, Adesh, and thank you so much, for joining this conversation, and all the best for the business.
Thank you.